So it's a big Durbin Amendment podcast, isn't it, James?
It is. Talking Durbin Amendment, talking Credit Card Competition Act. If you've maybe been living in a cave and are not familiar with the fact that the Senate right now has an amendment to a defense spending bill that would significantly regulate credit card processing costs. Mm-hmm. That is happening. Let me just say this episode is a little bit unique because I really think it's such a good episode to go through. Elaina really breaks down the Durbin Amendment and how that worked out because we have 10 years of data on that. So how did that work out? Then she also talks about the Credit Card Competition Act and what that means, how it relates to the Durbin Amendment, how it's different. Then I do a questions in the field where I just talk about what does all this mean for the ISO and for the agent? Why, because actually it would be short term, it would actually probably be a huge win for a lot of ISOs if this happened, but it would be a long-term significant downside to it. So I talk about that in questions in the field. And then Patti talked about the insiders.
And the insiders, I just sort of go over the Credit Card Competition Act, what it's going after, and some considerations that we should be considering.
Yeah, good point. Yeah, right.
Right. But this episode is sponsored by NMI, nmi.com. And if you're ready, James, I say let's go.
Let's do it.
Welcome to the Merchant Sales Podcast.
Hey, everybody. Patti and I are here today with my good friend, Elaina Smith. How are you doing today, Elaina?
Doing well. Thank you, James. Thanks for having me.
Absolutely. So Elaina is CFO at Secure Bancard. Also, though, I think your title has kind of morphed into content creator on LinkedIn for the payments industry. Might be a more apt title at this point. But at any rate, we're talking about a very important subject. So we have an interview that's going to come out this week and then one's going to come out next week where we're talking about this new regulation, the Credit Card Competition Act, I believe. I don't know if that's still the name now that it's an amendment, but we'll get to that. But we're talking about this impact. And so in today's episode, we're primarily going to focus on actually looking backwards a bit. So we have Senator Dick Durbin, and he's kind of the primary driver of this. Well, of course, we have the Durbin Amendment. And so we're going to talk about the Durbin Amendment from 10 years ago. How did it work out? What are the lessons we can learn from that when we look at this new legislation? And then also get Elaina's thoughts a bit on this new one. But before we dive into that, Elaina, give us a little context for those who maybe don't know who you are. Tell us a little bit about your backstory and what you do.
Okay. Well, we have a wholesale ISO, Secure Bancard, and we like to say that we're the alternative to the big payment processors because we do everything in-house. And part of that, of course, is that we do our own merchant funding and billing. So because of that, it's really important that we stay on top of, updates to interchange, dues and assessments and everything, because we're doing that all ourselves. So of course, I want to stay current and all those things. And just because it's a wholesale ISO too, and I have my hands in all parts of it, my husband and I both own it and end up doing a lot of different things on any given day. Learned a lot in the business that way. And so one of the things that I love to do now is share content on LinkedIn about all of our experiences in the business and just things in general about payments. There's a lot to talk about in payments because things are always changing. And I didn't see a lot of conversation happening about it on LinkedIn. So I decided to start creating my own content and sharing that.
Love it.
And great content you've put on there. I've read a lot
thank
of your
you,
posts.
Patti.
Yeah, it really is. For those of you, we'll just say right off the bat, if you're not following her on LinkedIn, you should. It's Elaina Smith. If you just go on LinkedIn, you'll find her. It's pretty easy to find. So, all right. So obviously, we're going to talk about this new Credit Card Competition Act, but I thought it'd be really helpful, Elaina, that we kind of look in the rearview mirror a bit. So, can you give our audience a little sense of the Durbin Amendment? What was it? Is it? And how does it work?
Sure. Well, the Durbin Amendment was passed in 2010, and the goal was to reduce interchange fees on PIN debit transactions processed on cards by big banks. It was really specific about how they classified that. And they imposed this cap on both the per item fee of 21 cents and the discount fee. They have a discount fee of 5 basis points. It also required issuers, regardless of their size, to enable PIN debit routing. So that they would have to have at least one backup unaffiliated network as an option. The thought was that merchants would pay less for their fees, for their discount fees, and then they would pass these savings on to consumers.
Which we know really didn't happen.
Yeah, exactly. Now that we have a little bit of history.
You have a little bit of history there, but let's, if you don't mind, I'd love to talk a little bit about the rationale behind which banks are regulated under the Durbin Amendment. As I understand it, the criteria, I believe, was $10 billion when they first set that up.
Exactly, Patty. So the interchange caps applied only to banks that had $10 billion in assets. And I guess the hope was that they'd capture a large enough part of the market share, and then they would kind of leave the community banks and the credit unions to go business as usual. But there was a really interesting thing that happened afterward. And that's that there was this huge advantage for credit card processing or credit card issuing banks, rather, to be small. Because if you were under that threshold, then you didn't have to comply with those caps. And so we saw this whole crop of fintechs pop up, and they created an app. They paired it with a debit card. They got the backing of a sponsor bank, an issuing bank, and the interchange rates on those were as high as ever. And they were making, great income doing that.
Yeah, that was an interesting aside that I had not realized until recently, how that panned out. But it's
But
true.
you think about all those debit card products that have come out recently, paired with the app that are fintechs, and it makes perfect sense now. That's, they saw an advantage and they went for it.
Right. And it's also interesting because, while $10 billion in 2010 dollars seemed like, a fairly decent cap, in today's market, it's really not. And in fact, as we'll get into when we talk about the new legislation, I think the cap there is 100 billion.
Right.
Yeah. So, it's interesting. I actually have a little bit of interesting insight on this one. Elaina, I thought you might find this interesting. So just yesterday, what was that? A couple of days ago, I had a big meeting with my team from ISOAMP, the statement analysis side, because we've done an integration with Data Axle that we haven't rolled out to our clients yet or whatever. But the idea initially was we wanted to be able to take interchange tables and be able to pair those with information like MCC code, zip code, whatever, number of employees, annual revenue, whatever, right? And be able to look for trends to better predict interchange when we don't have an interchange table. And one thing that I thought was so interesting relative to the Durbin Amendment, I was actually shocked by the level of variance that exists for the percentage of debit that is regulated. We would look at, for instance, we would take an MCC code like hairstylists, right? And we would look at 300 hairstylists from all over the country. And we would see regulated debit of 93% all the way to 12%.
Wow.
It was insane. And
that's crazy.
That's a really big problem because, if you're trying to predict interchange, that's the main, that's the number one assumption, right? Well, it's even among the exact same business type SIC code, there's this massive spread. We're what in the world? Well, then we started digging into it, and we're still actually digging into making this new algorithm. But what we found out was the highest correlation that we found to be able to predict it is how many miles away from a metropolitan zip code.
I was going to say demographics. Are probably a better.
Well, yeah, it was actually geographics.
Geographic, yes.
Right. And but demographics played a smaller role because business types that target older consumers versus younger, right? Younger consumers are much more likely to go to Chase or one of these banks that has more of a techie kind of feel to it. Right. But the biggest one was geographic. And I mean, the swing was so huge because in these more rural markets, you have a regional or a local bank that kind of dominates that market, and they have less than 10 billion in assets. And so, they don't have the regulated debit. And it just seems
anything goes. Yeah.
It just seems like such a stupid idea. But anyway, so I was really amazed by that. And even it seems like it's so much worse than it was last time I looked at those numbers 3 years ago. And I think people are starting to game the system a bit. The percentage of regulated debit, I haven't run the full numbers yet. I'll do a podcasting on it at some point, but the drop is unbelievable. In the overall percentage of regulated debit that was 3-4 years ago versus today, it's a huge drop because of what you said. Banks have started to go, so we have to structure ourselves such that we have less than 10 billion in assets. Okay. We can figure that out.
Easy enough. Yeah. We can be small.
Yeah, exactly. So anyway, all right. So let's move on a little bit here. So the stated purpose of the Durbin Amendment, as you mentioned, it was ultimately to save merchants money. And the idea, the rationale was by saving merchants money, they're going to pass these savings on to the consumer. And so we're going to be able to save small businesses money, and we're going to be able to save consumers money. So we've got 10 years of data now. In your opinion, Elaina, how has this worked out? What are your insights on kind of where we're at with the Durbin Amendment?
Well, one of the interesting things that happened as well is that the big banks lost all that interchange income. All of a sudden now they're capped at this certain amount that they have to spend. So they have to make up for that in some other way. So what happened was on these consumer checking accounts where they had a debit account linked, those used to be free. Well, now we've got to make up for that income. So they started charging for the fees for those accounts that were previously free. And maybe other fees, they started to have to mark up a little bit to be able to compensate for that. Now we're starting to see that swing back the opposite direction, I think, as they started to get a lot of kickback on that. And now you see them all saying, we're back to no fees again. But I think that's one of the ways that they tried to make up for it. Yeah. On the merchant side, I don't think that we saw the cost savings either. The assumption was that these lower fees would lead to lower fees for the merchant services side. And you're assuming that everybody's on Interchange Plus. But actually, some of our merchants, as we know, are flat rate. So for those merchants, they didn't see any savings. And then add in that very thing that you were talking about, the complexity of all the different, interchange categories that are accepted and whether they know whether they're getting savings or not. Are they enough savings consistently enough that they can pass it on to the consumers? I think it was just it's a very narrow piece of card acceptance to assume that they're going to be able to pass that on. And then you have the whole small ticket factor as well. So you have that flat fee of 21 cents per item. And think about places like convenience stores where the average ticket is $5.
Right.
And you have this flat fee. What's the effective rate on that? That's a lot higher than just having a regular interchange rate that you pass through. So it didn't work out for merchants with lower average tickets at all. They have a higher effective rate.
Yeah. The 22 cents on $5, isn't that like the 4.4% effective rate? Right. Like just
that math never works. That's one of my favorite conversations to have, is trying to explain that, somebody's looking at their statement. They have that many, they have a ton of transactions, the low average ticket. Why is my effective rate, 4.5%? Well, because you have that, it's just debit pass through.
No. It's one of my favorite stories, actually, Elaina, in the industry was, I don't know if you were following this, but I don't know how long ago this was, but Square came out with this announcement that they had partnered with Starbucks to provide payment processing under their flat rate model. And it was funny because Jack Dorsey had just said in a interview or whatever that they're not a payments company, they're a technology company. And he was like very clear, like, we're hiring technology people, like payments. We know that eventually is going to go to, that's a zero sum game. We're technology. And it was so ironic because then like the next week, here it is. They've decided to do all the payment processing for Starbucks, which is small ticket and has this really high cost with Durbin. And all of us in the payments industry were kind of like, that's really stupid. So they ran
Doesn't make a lot of sense.
I think they ran it for over 12 months. They had a 12-month agreement and they ran it for a while. And then, eventually, of course, they came out and said, we're going to have to terminate this relationship. Because, they lost like, I think $100 million or something on this because, they didn't have a flat rate underwater. And it's like, anyway, but I think it's interesting. It just has such a big impact on the small ticket. So, all right. So now let's talk about the implementation of the competition part. So you alluded to it a minute ago. Because this is also part of the Credit Card Competition Act, the new one, but it was this idea of the Durbin Amendment was supposed to handle debit routing, and there was supposed to be this competition where you had to have an unaffiliated network. So maybe you could define a little bit for our audience, what is an unaffiliated network? What does that mean? And then how is that kind of, played out?
So this is the part of that original Durbin Amendment that suggests that you're supposed to have this unaffiliated network. They just had this new rule come out that just clarified basically, if it's card not present debit, you still have to comply with the rule basically. Right. And now here we are, over 10 years later that they're coming out with this clarification. And that might give us some insight into how if this does pass, what's really going to happen with it.
Right. How long is it going to take to implement? And wasn't it?
Go ahead, Patty. I'm sorry.
No, you go.
No, I'm just going to say, one of the things we're dealing with here too, and I sort of come at this from my history of spending a lot of time covering the Fed as a reporter, is there is the regulatory process is so laborious. It takes so long. They have to, come up with a proposal, then get some, preliminary comments, and then finish the proposal, then get real comments. Then they have to, have an implementation, and put on top of that, something that I've shared in the past is that there's been a real shift in the Fed staff. A lot of the people who were responsible for writing the original Durbin Amendment regulations have retired. And so you have a lot of new people in there that are saying,
trying to figure out what they meant by it all.
right. I mean, that's, and in fact, I think you see that in this new clarification that you mentioned, Elaina. It's not of actually the regulation that they clarify, but their interpretation. You know, they have this interpretive tome that goes along with the regulation. Oh, by the way, we didn't interpret this correctly 10 years ago. Right. And now you only have, 8 months to comply, which is, basically what they're saying, right? Because July, I think they're getting a July startup date. Yep. So, yeah, I mean, it's interesting to me that this new legislation now is sort of honing in on that exact part of the Durbin Amendment, routing. And so if you don't mind, could you give us a high-level view of exactly what this new Credit Card Competition Act is trying to accomplish and how it's going to affect the industry?
Sure. I think the easiest way to explain it is that if a card holder comes and presents a Visa, there has to be some other alternative network for that transaction to travel on that can't be Visa and it can't be MasterCard. So there has to be some other option. If they present a MasterCard, it cannot be Visa and it cannot be MasterCard. Visa and MasterCard cannot be the fallback for each other. There has to be some other, they call it unaffiliated network. And that's the big question is, what is the unaffiliated network?
Right. And I guess what I'm also, so that's the similarity with the Durbin Amendment. It would seem to me there's also a key difference, right?
Yes. Yeah. The difference is that for the original Durbin Amendment, we're talking about PIN debit networks. Now we've transitioned over to the credit networks, and we're talking about them. And they have this $100 billion threshold in assets, which is specifically, it's like they're almost, targeting Visa and MasterCard. They're specifically going after them and saying it can't be, for Visa and MasterCard, these special rules apply, and we need to do something different for those card networks.
And 100 billion, I mean, we're talking about really only the money center banks, correct? I mean, I don't think we have a lot of regional banks that are that big.
Well, the other difference too is the Durbin Amendment with the debit card networks, they were talking about issuing banks and their assets. And here we're talking about card networks and their assets. So they're specifically targeting Visa and MasterCard, knowing those are the only two card networks that meet those thresholds.
Okay. Wow. Okay. That's I wasn't. That's a clarification that's important.
And I think the thing that's different is that the Durbin Amendment had these interchange caps. This one does not have any specific interchange caps. Right. And instead, we're just doing this, this suggestion of an alternate network. And I think they hope that passively the interchange is going to go down. I don't know how that would work, but I think they want the same effect, but without trying to have this cap on interchange.
And in fact, that's what they, in the statements that they gave, that Durbin and Marshall gave when they introduced the amendment. And as we should tell people this, and I think I reported on this last week, this legislation was crafted back in July, but it's currently under consideration as an amendment to a massive defense spending bill. And as anyway, I'll digress. I don't want to digress too much. I want to leave it to James. I know you have some questions, but just wanted to make that clarification that this is an act that is pending in the Senate and could come up for a vote soon.
Yeah. And we'll hopefully, I think the timing will work out really well, actually, because when we do next week's episode, it'll be after the October 11th hearing. It'll air right after that. So we'll be able to hopefully provide an update on that as well. So Elaina, we talked a lot about the Durbin Amendment and its impact on the industry. Now we've kind of switched to this new Credit Card Competition Act, and of course, as an amendment to the defense bill. Let's say this thing passes. And I guess I should ask you, what do you think the odds are that it does pass would be one part of this question. But assuming that, it does pass, at whether it's now or in the future, what do you see as the primary impact on the payments industry as a whole?
Well, as far as my chances of this thinking that this is going to pass, I think I'm probably biased because honestly, I don't understand how it can pass. I think it's going to be like, if it does pass, everybody's going to be like, now what?
Mhm.
How do we
Right.
actually implement and enforce this thing? But I think if it does pass, I think it's going to add more complexity, which we already have so much complexity, and we have to. There's a lot that happens as part of a transaction. And I think the people who've come up with this legislation don't really understand all the
Right.
moving parts that happen
Mhm.
as part of a payment transaction that flows through.
Yeah.
But as part of that added complexity, I think that we're going to only have more cost. And so things are going to go in the opposite direction of where they hope that we do. I'm not super optimistic about it. If you want to, increase competition, I don't think that this is the way that you go about it.
Yeah, and it's just as an aside, like I was saying before, when they introduced this legislation, they're like, oh, we're going to let other networks compete for this business, and therefore the prices are going to go down. But it seems to me they don't even know what those other networks are, do they?
I don't think they do.
Yeah, well, I mean, that was my next question. It's like, what's going to happen? Who's going to be this kind of quote unquote other network, and how is that even going to work? Do you have any thoughts, Elaina?
This is the question that really makes my head spin from the acquiring side, at least, because honestly, I
Right.
don't know the issuing side as well as I know the acquiring side, but just even that one side of it, how would this really work in theory? So I came up with 3 options. The first option would be that it has to be one of the PIN debit networks, but I don't really know that that can work because PIN debit networks are single message systems
Mhm.
where your authorization and your capture is all in one.
Right.
Where the credit card networks are dual message, where those are separated. So that transaction doesn't actually get captured until the merchant batches out of their terminal. And that's very much unlike the PIN
Right.
debit networks. I don't know how one could swap and stand in for the other. I don't see how that would work. One of the other possibilities, of course, is one of the other big card networks like Discover or American Express. And I guess that's a possibility, but I've seen some, things come out from some of the financial institutions that say the infrastructure is not built to support more than one, network or dual message
Right.
system
Mhm.
when you're routing a transaction. Which, from the acquiring side, I believe that. I don't.
Yeah.
It's making my head hurt,
Yeah.
to think about how that transaction could just go to a different card network, and then how does
Right.
that work for the issuing bank and how they
Right.
earn their interchange? Where does the interchange go? Do they still earn it? Are they
Mhm.
still going to give all the rewards to the cardholder? Are they still going to, honor that transaction and do all the things for that cardholder in the same way if it's flowing across Discover rails instead of Visa rails?
And then there's chargebacks too.
Exactly. Imagine
Imagine.
chargebacks are already, I didn't even think about that, Patty, but
Yeah.
imagine the mess that is now chargebacks because
Uh-huh.
all the rules are different across the
Yeah.
card rails for different card networks for
Right.
chargebacks. And now
Right.
you're introducing that as well as a complexity. And then the third thing I think is just some other alternate network. I don't know. Maybe they have something in mind, but
Maybe Fed now.
I don't know of
Yeah,
another
right.
network that can do all the things that the card networks do. So I don't know what that would look like.
Yeah,
Okay,
well,
now my head is spinning.
yeah. Well, and to me, I think what's so interesting about this, I was reading the legislation, and I just thought it was so ironic. I would love to actually be at the hearing on the 11th and just present one interesting comment, and that is, does anybody know the definition of a network?
Mhm.
A network, by definition, is something that ties two things together. Like, it's a network for a reason, because you have a consumer with a Visa card, which is tied to a bank that has the money that needs to go to a bank that's going to get the money.
Mhm.
You can't just say, well, we
We're
want to run
going
it
to
over.
slice that in half and
It's
insert
like,
something else.
well, wait, what do you mean? It's like, by definition, you can't say we want to go across two different networks. That's not possible. By definition, you might expand the capabilities of a single network, but like, by definition, you can't take a transaction from one network and decide to move it to a completely different network, because by definition, that other network isn't going to be connected to the dots that needs to be connected. Like, it's a network. Like, that's what the word means, so.
That's one of the things I thought about too, is that before they introduce any of this, I need you to prove to me that you understand how a payment flows through a network and all of the things that are involved in that, because clearly
Right.
there's no understanding there.
Yeah.
Maybe we should send this podcast to the Senate.
There you
Durbin.
go. As part of the commentary.
Right?
Who do we know that knows Dick Durbin? We need to go to our Rolodex here. But yeah, I think that's really crucial. Elaina, what, any impact yet on kind of ISO agent, or, should they be thinking about anything? Should they be doing anything, or is it just kind of staying informed? I'm just kind of curious to your thoughts of like how this is going to play out for kind of more the lower level.
I think it's definitely at this point just staying informed. I think
Yeah.
if this does by some long shot pass, that I think it'll be a lot of sitting around and waiting and figuring out how to
Yeah, I agree.
actually implement it,
Yeah,
similar
yeah.
to that federal rule that just came out for the Durbin Amendment for the, unaffiliated networks.
Right.
I think it would take them a very long time to figure out how to implement it. So I don't really think that there's anything that we need to do other than just stay tuned to what's happening next.
And I think it's good to stay tuned, and also, if possible, to kind of, keep that in your mind for conversing with your lawmakers. You know what I'm saying? I mean, ISOs
Right.
and agents out there, if they have a connection with their lawmakers, they really ought to be doing something proactive, because the way the legislative process works, if this amendment is approved at the Senate, well, then it has to go back to the House for more votes and negotiation. So there is plenty of room in there for this industry to let lawmakers know what this legislation potentially could do.
And I think that's really important, Patty. I think it is important for us to speak up as an industry. That's one thing that I've been a little bit surprised that we haven't heard a lot
have I.
from the card side of the card acquiring side specifically
Mhm.
of the industry. All the commentary that I've seen has been from the financial institution side on the bank issuing
Right.
side. And I think it's really important that we speak up and say, we don't even know how this would be possible. And we know how this works. So
Right.
I think
Right.
our voices should be heard.
And I
Yeah.
will say that MasterCard did make a statement about a week or two ago in which it said, it was I believe it was the CFO, and he was in a conference. I wrote about this in the green sheet. He was on a conference call where he said, everybody's talking about equity. What about equity on our side of the thing?
Right.
We spent a lot of money building these networks, making them safe and secure. And now you want us to just let anybody come in and take these transactions?
Well, yeah. And think
So
about
I credit MasterCard for saying that.
Yeah, for sure. And I mean, think about the opportunity here too. I mean, it's going to be insane as far as the scramble. If this actually passes, that, maybe it's Discover, American Express, something else, like somebody is going to say, I mean, just look at the debit networks. I mean, my goodness, I think about companies like Shazam and others that I know who have, they were like, wow, this is like the best thing ever.
Right.
Like, we got to jump in and, you know what I mean? But even then it's been very difficult and challenging because, again, the technical infrastructure just doesn't exist to do this seemingly impossible thing of taking, a transaction from one network and just saying we're going to run it on another network. That doesn't even make any logical sense. So I think it'll be very interesting uphill battle, to see where this goes. And frankly, I think it's because of that Visa and MasterCard haven't actually been even more vocal, because I think if I'm Visa and MasterCard, I'm thinking there's two possible outcomes of this. The first most likely well, of course, the most likely outcome is it doesn't pass. The second most likely outcome is nothing happens, right? Because this isn't really possible. So something very unusual is going to have to happen. It's going to take a long time.
And they're in this interesting position that this is specifically targeting them. So they can come out and I guess try to defend themselves. But for them to say this can't work is not as effective as us on the card acquiring side of things as a whole in the industry. And, maybe processors coming out and saying this doesn't work, because this is against them. They're trying to go against the duopoly of Visa and MasterCard. And they're just they would be perceived as defending themselves. So I kind of understand that they're not coming out super aggressively, because
that's a good point.
It might be perceived that they're just, they're against this because they have something to lose, but they're against this because it doesn't work, to your point, James.
Well, and I think what's an interesting other option that could happen is, let's say that somehow all the stars align here and Durbin gets what he wants, and there's this third entity of some kind that decides they're going to jump in. I don't see there being 50 other entities. I see one, right?
Right.
What is this one going to do? Are they going to slash interchange by 50%? No, they're going to slash it by 5 basis points. this is a game of like massive scale. So they're going to get into a competition per se with Visa and MasterCard, and it's going to be the exact same thing that Visa and MasterCard have been doing for years. They're going to say, hey, let's kind of compete with each other, but not too much. You know what I mean? And so I just don't see it really being quite. When I first saw it, I was kind of like, oh, this is earth shattering, and it would be an insane disruption to our industry. But the more I thought about it, I was kind of like, I mean, I don't see any scenario where this is in any way going to solve the objective that it's trying to solve. I just see zero path. I think the very, very, very best case scenario is we get Visa, MasterCard, and something else that ends up being a lot bigger than it is now that is charging virtually the same rates as Visa and MasterCard would charge of interchange.
But then that third network would also have to go out and market itself.
Right.
And
you have to have the acceptance side of it, which we know how long that takes to build up.
Yes.
Right.
Decades.
Right. Yes.
Right. Yep. So anyway, well, Elaina, I think one of the really important ways for our audience to stay in the loop on this would be to follow you on LinkedIn. So just tell our audience, maybe if you want to share about how they can find you on LinkedIn and any other things you want to share about how to learn more about you and what you do.
Sure. Most of the content that I share on LinkedIn is under my personal profile. So that's Elaina Smith, Elaina. And then we also try to share some content as well under our company webpage, Secure Bancard.
Awesome. Well, Elaina, thank you so much for taking time out of your busy schedule to share your insights with us about this, all this craziness happening. Seems like there's always something crazy happening in our industry, which makes it fun and interesting.
Always something to talk about. Yes. Yeah. Thanks for having me. I appreciate it.
Thanks for being here.
So, Patti, of course, this episode is brought to you by NMI.com, but NMI also owns IrisCRM.com. Mm-hmm. And today I want to talk about Iris as the operating system for the ISO.
Yeah, that's a good way to put it.
It is. That's really what they do. And I think depending on your journey, you need to make sure you have the infrastructure. So if you're going to become, let's say, a retail ISO, and you're like, well, wait a second, now I got to pay my residuals out to my agents, right? Well, what am I do? Spreadsheets? Please don't. Your agents are going to want a portal they can log into. They're going to want to see the details of the transactions and how the residual is calculated. Iris has got you covered there. They have the infrastructure for that. You go up and say, well, now I want to be a wholesale ISO. Well, now you got to deal with the underwriting process. Mm-hmm. How do you do that? Well, Iris has got you covered there. They've got the operating system for that, right? So they have all the infrastructure. You can implement, customize, integrate with underwriting departments from all over the industry. So if you're looking for infrastructure for your ISO, no matter what it is, go to IrisCRM.com and make sure you check it out.
This is Questions from the Field, brought to you by ccsalespro.com. And now, here is Questions from the Field with James Shepard.
So, Patti, in Questions from the Field today, I actually want to talk about more of the impact of this regulation on ISOs and agents directly, and the way I would see it playing out that I think is interesting. So one of the things we haven't really talked about is profitability for our industry. And so what we have to understand is this is a two-edged sword right now, because I actually have talked to several ISO execs about it. And it's funny because they're worried about the wrong thing. Their concern is, oh my goodness, this is going to slash our profits. No. This, if everything worked out exactly as Senator Dick Durbin hopes it will work out, what's going to actually happen is your cost of interchange is going to drop like a rock. So you've got all these merchants on, cash discounting, dual pricing, surcharging, flat rate pricing, and tiered pricing. All those accounts, whatever the cost drops is going to be an increase in margin. And so you don't need to be worried about this from a margin perspective. This would be a windfall profit for our industry because, fortunately for us, or unfortunately in this case, the Senate has no idea how this works. And so they don't understand that merchants don't always get the true cost passed through to them. So this is not really a profit concern. And even for those that are on Interchange Plus, the plus is still going to stay the same. The interchange is going to drop. So this is not a profitability thing. There's only two reasons that this is a problem for ISOs and agents. The immediate concern is the disruption to the overall technology, like infrastructure of the industry, and what that would do to an industry that already is frankly a bit crippled from legacy infrastructure that's unnecessarily complex.
Right.
And that's really the concern is, what does this do? I think about issues with, just recently this issue with Clover. I don't know if you saw that, but Clover had some crazy downtime.
Right.
Yeah. you think about issues like that. Imagine if issues like that were happening, every week. 1 week it's PAX, the next week it's Deja Vu, the next week it's Valor. I'm not saying necessarily that would happen. I'm just saying that's the kind of thing that we would be worried about. Is that
Yes, sure.
okay? We have to put in a third network that isn't even really a separate network. We have to make one big network where we can route transactions across different networks randomly.
Mm-hmm.
Based on who knows what kind of logic that's going to run on a computer somewhere. And so that uncertainty would create a lot of technical issues.
Technology issues, right? I mean,
yes. And so that would, that could significantly compromise core underlying systems that we take for granted in the payments industry. I mean, like today, when you go to swipe a card, when somebody's just running their Visa card on a terminal that's been working pretty well, or a point of sale system, I mean, we kind of take for granted that it's going to work.
Right.
Right. This would call all of that into question, and it would be, well, is it going to work? We don't know. And now again, it would probably take, who knows, 5, 6, 7 years before
it has to
anything
take
like
at
that
least 5 years, right? To even get a network up and have all the protocols in place and so forth.
But even if we did, it would just be a disruption that we have just frankly never even seen before. I mean, it's something that I can't even, like Elaina was even struggling to articulate what it would mean, because we don't know what it would mean. I mean, it would be insane because there's just all kinds of systems that are built on top of this, core logic that, Visa or MasterCard or Discover, whoever, American Express, it's like it's a network. I mean, you got 3 parties. You have an issuing bank, you have an acquiring bank, and you have a consumer, and like it all works,
Right.
And this has been going on for decades. So changing something like that is a huge thing. So that's an immediate concern. Immediate meaning like 5 years or whatever. The long-term concern is just this idea of regulation entering our industry in the first place.
Yeah.
Right. So when you look at a country like, for instance, Canada, and Canada has a special law for ISOs, right?
Mm-hmm.
And it's regulated. Mm-hmm. Now it's not as highly regulated, but then if you look at maybe France, a lot of the European countries, Britain and things like that, they actually have pretty significant regulation there that's put a lot of pressure. And so it's kind of more of this slippery slope of, we don't want our industry regulated because when that happens, how many of you listening have recruited people from the mortgage industry over the last 5, 6, 7 years, because the Dodd-Frank Financial Reform Act and other things that came out regulated that industry to the extent that people that were selling in that industry could no longer really make very good money. And so they left.
Right.
So that's the slippery slope, is that, how long is it going to take for, the Senate to realize that this, Durbin Amendment and then let's say the Credit Card Competition Act passes, how long will it take for them to realize, oh, wait a minute, Square and Stripe and PayPal and all the acquirers, they just kept all this extra money because we lowered the cost of interchange, and they'll say, well, wait a minute, I guess we need to regulate them so that we make sure that they pass the savings on to the merchant. So, and
it just starts steam like
snowballs. Yes. So that is, so I wanted to kind of clarify that, because I think for our audience, a lot of them might be thinking, they hear the interview and it's like, well, why does that matter for me? Well, this is why it matters for you. So keep these things in mind. And again, stay in the loop. Follow me on LinkedIn, follow the podcast, follow Elaina and other industry professionals so you can really understand that. And make sure you tune in next week. We're going to talk to James Huber. We're actually about to record it right now, but we're going to talk to James Huber. We're going to put it out next week and get his take as an attorney on all of this legislation as well. So I really wanted to take a couple of full weeks on this, because I talked about it, Patty. We both talked about it at the beginning of the year.
Yes, we did.
This was going to be the year that regulation was going to be a major topic.
You heard it here first, folks. And it's panning out, and we really need to stay on top of this. I really feel like if we, I feel like Durbin Amendment they were able to slip that through because nobody was paying attention.
Right.
And I want everybody to be paying attention.
Yeah, I agree 100%, Patty. Good stuff. So there you go.
James.
There's our thoughts.
This is the Insider's Report with Patty Murphy, brought to you by The Green Sheet.
Okay, so James, as we just discussed with Elaina, Senator Richard Durbin's at it again.
Yes.
He has hatched a plan along with Senator Roger Marshall, I believe his name is, a Kansas Republican. They've hatched a plan to bring new credit card regulations for a vote on the floor of the Senate. The plan is to attach it as an amendment to a sweeping defense bill that's now before the Senate. And we discussed this briefly, but I sort of wanted to just go into what it all means. And it's basically the amendments they're offering mirrors the Credit Card Competition Act, which they introduced in July. And that bill would require the Fed to issue regulations ensuring merchants get to choose which networks process their credit card payments. And only one of those networks can be Visa or MasterCard. Now, who the alternates are is anybody's guess. I would suggest it might be the regional EFT networks, but as we discussed with Elaina, that could have problems. And then, of course, there's Discover and Amex. Like the Durbin Amendment, the rules would only apply to cards issued by the largest banks, those with over 100 billion in assets. But of course, those banks do issue them at this point, the majority of credit cards. Now, I don't think that the industry is in imminent danger of this bill getting pushed through on the back of a defense spending bill.
That does seem a bit of a desperate move. It
does seem a bit, and the way the legislative process works, even if it did pass, it would still have to be approved. Go through a whole approval process in the House and then re-voted in the Senate. But I wanted to just give a couple of insights and considerations for people to just hold on to. And that is, Senator Durbin is a powerful member of the Senate.
Right.
He's the second ranking member of the Senate, so it's his job to whip members into alignment on various votes. On the flip side, Democrats are not as good at towing the line as senators on the other side of the aisle are, as we've discovered in the past.
Sure.
Now, this is part of a spending bill, and spending bills are generally immune from the filibuster rule. But there are exceptions, and an opponent could challenge the amendment as being non-germane to defense.
What does non-germane mean?
It's not like it. It's not affiliated. It's not associated. It's not
the connection of that amendment to the bill that's on the back of isn't strong enough.
Isn't strong enough.
Right.
I mean, if it were say it were a piece of banking legislation or financial reform, as was the case with the Durbin Amendment back in 2010, it's a lot easier to attach something about credit cards onto a bill about financial reform because the two go together.
Yes, understood.
Okay. What they did to make this bill, quote, germane to defense is they asked for a study of the interchange fees paid by military commissaries.
Yeah.
But that's really.
It certainly is not in any way, an equal comparison to talk about the interchange and say that because of the interchange paid by military personnel, that somehow that warrants that we put this on the back of a defense bill, even though it impacts the interchange everybody pays.
Right. Exactly.
Clearly, it's a political move to try to get the amendment passed.
It's clearly a middle. Yeah, exactly. Debate on this particular spending bill is slated for October 11th. So we should, tune back in.
Yes.
Next week to find out what happened. I think it's worth noting that Marshall is the only co-sponsor of the bill in the Senate. There are no other Democrats or Republicans that have signed on for the bill. A companion bill, a similar bill, has been introduced in the House. It was introduced in late September by Congressman Peter Welch, who's a Democrat from Vermont, and Lance Gooden, who's a Republican from Texas.
Okay.
Not surprisingly, some of the largest merchants, including Walmart and Target, have sent letters to members of Congress urging enactment of the Credit Card Competition Act.
Yep.
Which is why during our interview with Elaina, I suggested we should be doing the same thing. Acquirers and ISO should be doing the same thing.
Yep.
The Electronic Payments Coalition, which I think is the only lobbying group that seems to be saying anything about this. And it's a Washington-based lobbying group that represents Visa, MasterCard, and a lot of the largest banks. It came out with a statement the other day suggesting that using convenience store industry data and showing that prices at convenience stores have gone up dramatically while interchanges remain relatively stable over the last few years.
Right.
And here are a few examples, which I thought were really interesting. ICE is up. The cost of ICE at convenience stores is up 262%. A cup of Joe is up 170%. and food service, subs, burgers, up 120%. So basically what they're saying is, convenience stores, you're complaining about interchange,
Right.
but you're raising your prices far more than interchange is impacting you.
Well, and I think the larger takeaway, right, is that supply chain issues
Yes.
right now dwarf any potential issue related to payment processing. I mean, now again,
Agreed.
not necessarily for the business owner themselves, meaning obviously there is a big cost associated with the interchange and all of that for them. But the idea is this idea that somehow it's going to reduce the cost for the consumer is just ridiculous when you look at this data, because obviously that even if it did reduce it, you wouldn't even notice because the interchange isn't going to drop that much. It's going to drop a little tiny bit maybe. But,
Right.
Meanwhile, you have all these other supply chain issues and things that are driving the prices up for consumers in a significant way.
Right. But, I think this is just like some really interesting information that people really need to hold on to. And I really think it's incumbent upon our industry to let our voices be heard.
Great stuff, Patti. Thank you.
Thank you for listening to the Merchant Sales Podcast. Whether you are an industry veteran, processing executive, or just trying to learn about the payment space, we appreciate your time. The Merchant Sales Podcast is a joint production of greensheet.com and ccsalespro.com, and we hope you will tune in next week for more information and tips on building your merchant services business.